Hey guys, welcome to the Q&A. So I've compiled about 10 questions that you guys have asked me, and this is me answering them. All right, so let's take a look at what you guys have asked me, and hopefully you guys gain some insights from this video. Right, so let's get on to it. Okay, so the questions. So I'm going to answer these questions one by one. Okay, I'll be answering them one by one. So if you follow my cursor, let's look at question 1. What are some effective time-based trading strategies for beginners? Okay, so for beginners that are looking to get into time-based trading strategies, I would say that the best possible time-based application of price that you could basically go for is the trading of the New York session. Okay, if you are a die-hard ICT fan, or if you are just getting into ICT, it would be better if you study the intermarket profiles, right? It would be better if you study the intermarket profiles on a daily basis, so that you are able to basically get in sync with order flow based on retracements, expansions, and even consolidations. Okay. All right. Question 2. How do you identify and manage trading biases while making decisions? Okay. Now this is a really easy question to answer. All right. The way I understand and manage my trading biases is by using my proprietary bias predictor. Okay, 80 to 90% of the time it has a great success rate. Okay, on really great weeks it has a 100% success rate. So that's based on a mechanical and quantifiable approach of time, the way I approach time. That's what the bias predictor is based upon. And so having a bias predictor based on mathematical quantities, I am able to defer my analysis to the outcome produced at 4:30 a.m. EST. Question 3. Can you please explain, there's no please, okay. Can you explain the concept of doubling theory and how it applies to financial markets? Okay. So I can't really get into how it applies to the financial markets, but all I can say is that the doubling theory, it's used for deriving macros in time. Okay, it's used for deriving macros in time. That is how I have derived my macros in time that I use on a day-to-day basis. It has nothing to do with how far a price moves. Okay, it has nothing to do with how far an asset class's price moves. Okay, not how far. The doubling theory is applied on the horizontal axis, not the vertical axis. Okay, the vertical axis, which is highs and lows, they are measured or they are projected via standard deviations, not the doubling theory. Okay, the doubling theory is a pure time-based application process that I use. Question 4. What are the key factors you consider before entering a trade using time-based analysis? Okay, so you see the entire premise of waiting for the correct time of day, that's what I follow, right? Because a liquidity rate that happens before London causes an issue for London. A liquidity rate that happens before NY causes an issue for NY, because that leads to an additional step for manipulation. Okay, so that is the only thing I look at. So the key factor to consider is, did the previous session take out liquidity or not? If so, then in the actual session, in the actual London or in the actual New York session, I have to look for an additional phase of manipulation. Question 5. I think I mislabeled 2 question 4s. Alright, so the question 5 up here. What are the main differences between time-based and other trading strategies? So a time-based trading strategy is basically, as the name implies, you are waiting for certain times of the day to make executions. Okay, you are waiting for certain times of the day to execute in price. Whereas other trading strategies, they look for signatures in price. Okay, they look for signatures in price. While when I look at time-based trading strategies, I know that, okay, inside of a particular period of time, price should expand, price should consolidate. And if you guys have been following me for quite some time, you can see my executions all over my YouTube channel. And there was also a period of time on Telegram in which I called the exact zones of time in which price should expand. Okay, all right. Follow my cursor. What resource or tools do you recommend for traders looking to improve their skills? There's two of them: the price action predictor and the bias predictor. Okay, these are the best possible tools that you can literally ever get in the current marketplace of the trading education industry. Okay, trust me on that. All right, here. How do I approach trading psychology and maintain a positive mindset during challenging market conditions? Journaling. Now, that's a pretty generic answer, but journaling is the key. As I mentioned in another video, right? By writing stuff down, you are literally putting stuff from your brain to something on writing. Okay? It creates a you versus you situation. And of course, you're going to want to be better than the you from yesterday. Okay? And in order to maintain a positive mindset, right, you have to keep your eye on the price. Okay? You have to keep your eye on the price. What is the price? Financial freedom. Maybe it's different for you. Maybe you want to be a hedge fund manager. Maybe you want to be popular on Instagram or in any other form of social media. Okay? A positive mindset, regardless of what your end goal is, should be there. Okay? You are the only person that can pick yourself up when you're down. Keep that in mind. Okay? All right, question 7. It's technically question 8, so my bad. All right. Can you share your journey as a trader and how you developed your time-based trading approach? All right, so I started trading around 2019, just before COVID. Okay, and I am a person that can absorb information really fast and apply things really fast. Okay, so I learned ICT. I was in this private mentorship, and then I got out of it. Okay, and you can literally tell my fluency with ICT's concepts because the way I view ICT's concepts and the way his diehard, within double air quotes, the way his diehard fans or his diehard students view his concepts, they're completely different. Okay, they're completely 100% different. That's because I really listened and I really looked at what he was teaching. Okay, I really looked at what he was teaching and I really listened at what he was saying. The beauty behind his concepts is basically in the hidden meaning behind his words. Okay, literally that's it. Price moves to liquidate and to rebalance. Okay, always. Alright, so with regard to how I develop my time-based trading approach, it's when I really wanted to figure out, right? It's when I really wanted to figure out my timing, my entry timing. And I found that, okay, if I can do certain things with time, if I can anticipate certain things based on the time of day, it makes my job 100% or 150% more easier. Okay, makes it that easy to know when to buy, to know when to sell. Okay, to know when to buy and to know when to sell based on the macros that I can derive using the doubling theory, and that is how I developed my time-based trading approach. All right, okay. What are some common mistakes I've observed among traders and how can they avoid them? Okay, this is a good one. So the most common mistake that every damn trader makes, whether they are advanced, whether they are intermediates, whether they are beginners, right? It's number one, community hopping. Number two, the lack of engagement, right? The lack of engagement. That's the worst one, okay? And number three, revenge trading, okay? Do not community hop. Stick to one community. You're just trying to go around to find a damn holy grail. To find the damn holy grail. No, the holy grail is in time, okay? Find someone that teaches you the time element. I teach you the time element. ICT teaches you the time element. And then there are others who parrot him. Macros, 950 to 1010 macro. Everyone's going to say that now. Okay? You can literally find only 3 people, right? 3 people online that will teach you a time-based trading model, that will give you time-based trading concepts. Okay? And I am one of them. So the only way that a new trader, intermediate trader, or even an advanced trader could avoid this stupid mistake, yeah, is to just join one of these communities. Okay? And for God's sake, stop revenge trading. Like, bro, you lost a trade. Okay, cool, you lost a trade, man. Come on, just chillax. Okay, just take your journal, write it down, read it the next day, and you won't do it again. Or maybe let's say you do it again, but you're more desensitized now, because you're gonna feel tired of writing the same thing over and over and over and over and over again. You're just gonna be like, it's not worth it. It's not worth freaking over trading and revenge trading when I know that tomorrow I can get a better trade. I can recover my losses. Okay? So what I do is I just cut the loss and allow myself 2 to 3 losses per day, sometimes 4 to 5. Sometimes I let myself go loose. But all that matters is I come back up strong. Okay? Alright. Can you share your thoughts on risk management and capital preservation? Okay. Trading is a game of longevity. Okay? Your risk management is extremely important. Right? The supposed industry standard is 2% plus, or sometimes even 1% plus. But no, if you wanna do really well, if you want to survive for a long period of time, it's less than 0.5%. Okay? Your risk management protocol should allow you no more than 0.5% risk per trade. That is the only way you're going to manage your capital. It's the only way you're going to preserve your capital through losing streaks. Okay? That's the only way. And finally, how do I stay updated with market trends and news that may impact trading decisions? Simple. I use my price action predictor, because my price action predictor tells me at the end of the Asian session is telling me how the entire day is going to look like. Again, that's a mathematical quantity expressed through the application of time that allows me to know what each 4-hour candle will do and what the current daily candle will do. Also, what the current weekly candle will do, monthly candle will do, and the yearly candle will do. My time-based concepts are capable of anything and everything that I've spoken about and more. Alright, so I hope this answers your questions, and if you guys have any other questions, you can send me a message. And as we have come to the end of our Q&A session, I'd like to thank everyone for their questions and their participation, and I hope you found the answers you were looking for, and I hope you enjoyed the discussion. I know I was a bit egotistical, but that's me, and that's what makes me my brand, and that's what makes me who I am. Okay? Alright, so with that said, I'll see you guys in the next one. Good luck and good trading. Bye-bye.